I'd like to point out the CEE region, which is one of the growing regions within the EU, and also an increasingly important investment destination for real estate, and the impact of Brexit on the CEE specifically, because as you all know, the region is highly dependent on the EU, and there are several factors which can now change, leading to a different outlook going forward. So. As a whole, CEE actually has had very positive growth prospects. The GDP growth for 2016 is forecasted about 3.1%. The leaders of the pack have been Poland and Romania, and this is a trend we've seen for the last few years. The growth has been 3% plus, and one of the main reasons of the GDP growth over the last years, basically over the last 10 years since the accession to the EU, has been strong structural funding that has flown into the region from the EU. Poland itself has been the largest beneficiary of structural funding, and we've had two budget perspectives, one of which has been already consumed, and this was more than 100 billion euros in investments into the market. And the second one, the perspective for the years 2014 to 2020, is actually ongoing, and this is even more. This is almost 106 billion euros for Poland alone, which is now perhaps in jeopardy given the ramifications of Brexit. And for the growth going forward, there are major risks. One of them being the below par growth for the Eurozone for this year, which will be further negatively impacted by the Brexit, as well as the rising political uncertainty. So the three factors actually are interconnected, and that these may well lead to a slowdown in growth in the CEE region, and as a result, a decline of the investment market, which actually recorded its strongest ever performance in 2015. We've had 9 billion euros in capital deployed in the CEE. That's, just to put it into perspective, it's roughly 3.5% of the overall volumes for Europe, but a market that has been growing steadily since 2004. And Poland actually has the largest share in the market, at about 40%. So over the last 12 months, we've seen improved liquidity with investors coming in from all over the world, as well as an improvement in pricing. The main investors that deployed capital in the CEE market last year included US investors, as well as Asian capital, as well as the German open-ended funds and closed-ended funds as well, which have been the market makers in Poland for years now. Finally, the CEE investment market for real estate has come to a point when some of the largest deals happening on the European stage are actually allocated to the CEE region, one of them being the acquisition of a mixed-use office and retail portfolio by Redefine Properties, originating out of South Africa. At 900 million euros, this was the largest deal in Q1 in Europe this year. And just to give you a flavor of the direction in which the market is evolving, as well as the size of the transaction in question, we have transactions ranging from 100 million euros in Romania up to 570 million euros in the Czech Republic, and big portfolio platform deals that are close to a billion, which also shows the diversity of capital that's coming into the region. In the Palladium deal, for instance, you had a German open-ended fund that acquired this shopping centre, and to the right there was a JV between Oaktree, PIMCO, and a local manager originating out of Poland that acquired this platform, which had an underlying asset value of more than 1.5 billion euros. Which brings me to the investor composition, and I think this is one of the statistics that will change following Brexit, because UK played a meaningful part in the overall share of the investment activity, even though the market makers have been both the US and German players, but we had about 15% of capital coming from the UK, and we expect that this could now change. This could be compensated by the inflow of capital from other areas of the world, including South Africa and Far East. The Asian investors are actually coming in and looking at properties, both indirectly and directly. However, this chunk of capital will have to be replaced, particularly as the domestic capital within the CEE region as a whole is not as strong as one would have expected or liked. It's the strongest probably in the Czech Republic, but at the same time in Poland, which is the largest market in the region, it is the weakest. The pension fund are by law prohibited from investing into real estate, and the family offices are not as strong at the moment. So this is definitely one of the areas that would require improvement going forward. In terms of pricing, and obviously Brexit will have an impact on that. So far, we've seen yields move in over the last 5 years, and even in Q1 this year, we've seen a compression of about 25 basis points across all asset classes. Poland is the most expensive country in the region. However, we've seen the yields move in other countries as well, and there is still plenty of potential going forward, particularly as you look at the spreads between the Western Europe and Poland, Hungary, Romania, and Czech Republic. They still offer an interesting premium, particularly considering the quality of the underlying real estate. However, the Brexit can have its implications not only on Europe as a whole, but obviously this will be transmitted into the CEE region. And the main point, given that the interdependence of the CEE region to Europe and the European Union, is the negative growth on GDP, because export to the UK can amount up to 5% of the GDP, particularly for Hungary and for Czech Republic. So the early estimates are that this will impact the GDP growth in a negative way, probably up to 0.7%. We also note that UK is a meaningful contributor to the European budget, and as I mentioned previously, this will have to be restructured because they account for close to 10% of the overall inflows. So likely the budget will have to be restructured depending on the time where the exit actually happens, and this could result in smaller structural funding for Poland. What's also important is that finally CEE in general had a massive unemployment before accession to the EU, and currently it's single digit. Poland was the prime example where the unemployment before the accession to the EU was in excess of 20%. Now we're at 8%. However, one must remember that there has been a significant outflow of people moving to the UK and other Western European countries, estimated probably up to 1.5 million workers, and now there is an expectation that this will be reversed given the restriction on labour law in the UK. So the early estimates are such that up to 400,000 people could actually move back to Poland and other countries of the CEE region, and at the same time there was a massive transfer of capital from the West to Poland as the employees were moving in the funds to the families, and this was estimated for Poland alone at $1.2 billion. And then there is the other impact, which is the disintegration of the European Union. It's going to be either the accelerated integration of select European countries like France, like Belgium, and Germany, or actually going in the opposite direction, where there will be tendencies for the politicians, particularly far right, to try to go in do it the British way and try to exit the European Union. For the CEE, it's very important to be close to the decision makers and to the group that's growing and integrating even more. And for Poland and Hungary in particular, given the changes in power, those two countries are actually quite far from the group that's integrating closer than the others. And then we have the impact of the early indications of what could happen to the CEE because of the Brexit on the real estate side. The shift in capital and tenant allocation for sure will happen, and more capital is likely to go into the continental Europe. But our feeling is that Poland or the CEE region will not be the main beneficiary. So if there is relocation, it will probably be more to France, Germany, and this is capital that's not originating out of the UK, but rather the global capital. The investment volumes were down in Europe this year, but so far CEE has held on strong, and the early indications are such that for now it's business as usual, and we can expect more consequences later on as the structure of Brexit or the next steps are more clearly defined. I think one of the impacts of Brexit on the CEE region is the contraction of UK-based capital. We already see immediate impact of the pound-denominated buyers. Some of them have used the opportunity, even though it's only a few days, to either pull out of deals or to try to renegotiate the terms. And I think this capital will have to be substituted by another source. And at the same time, if there is an upward movement in yield in the UK, one would expect for this to transmit to the continent and also to the CEE region. Summing up, the trends for this year for CEE as a whole, as an investment market as such, that not much will change. There will be liquidity, there will be new players coming into play. The domestic capital will grow, but at the same time, I think towards the end of the year, when it becomes more clear what's the direction, I think the investors will start pricing in the next steps that are about to happen with regard to Brexit, and there will be a movement in pricing, which for now actually was going in the opposite direction, and we've seen the yields move in. In terms of the more pan-European context, and this is a prelude to the panel discussion, we have divided it into three categories, taking aside the immediate reaction, and those are the points that we would like to discuss or explore in more detail as the panel starts.
Great, thank you. Are there any questions for Piotr on any of it? Yeah, go ahead, Charles.
Yeah, you said nothing of the change in leadership of Poland and the authoritarian structure. Clearly that hasn't impacted anything to date. What are your thoughts going forward?
Just in case there's nobody who's following Polish politics, which would be understandable if you weren't, it may be good just to give a highlight on that, because in certain parts of CEE, you've had over the past kind of 4 or 5 years a slightly more extreme form of government, particularly in Hungary, that's been putting off investors. So it might be good just to highlight that in that context.
Absolutely. So for the last 8 years, as you may know, we had one party. It was a Liberal Party, and they were really well behaved. And however, this is probably one of the points that led to the emergence of another party, more right wing, which is called PIS. And basically, it's true that since the beginning of the year, they've had really some horrible press, not only Europe, but I would imagine globally. And they really were pushing the boundaries of the EU and trying to see where they are. But I think this is one of the reasons why I think that that there will be the accelerated integration of some of the countries, and Poland, because of the stance of the current government, will be somehow outside it. Basically, we have forced ourselves outside the circle by perhaps policies that were a bit too strong, particularly as Poland is the main beneficiary of EU funding. And even though the rhetoric has become cooler in recent weeks, I think the consensus is that will not be very eager to join the group that is going to be accelerating and integrating faster. So by definition, will be somewhat left outside the core group, unless the optics change and the government realizes that you can only push as far, which they have done. They might have got a quiet signal from the European Commission that they cannot go any further because there will be more monetary consequences to it, which they've done. They're definitely much more quieter these days. But I think their stance and their points of view means that we'll be somehow outside the main group that's integrating faster.
And in Poland, you mentioned about the large number of UK-based, particularly Polish workers, and I guess also in Germany. Less obviously a problem for Germany, which will remain. But is the Polish government already preparing for the return of the majority of those workers, or is that all still to be worked out?
I think it's still up in the air. It will have to be worked out. I think it's only sinking in. The fact that the UK will leave, and I think it is an issue that will have to be dealt with, because actually opening of the European labour markets was one of the main factors why Poland was able to step up in terms of its development, because the unemployment, as I mentioned, was 20% plus only 12 years ago, and this really helped ease the pressure. And clearly, there is a deficiency of qualified labour in certain pockets of cities in Poland. But I think the people moving back from the UK, the labour profile is much more diversified. So I think this will be an issue that will have to be dealt with by the government fairly soon.